If your business loan just got denied, I'm going to tell you something that actually helps. It almost certainly wasn't random, and it probably wasn't personal. Lenders turn down applications for a pretty short list of reasons, and once you know what they are, a denial stops feeling like a verdict and starts looking like a checklist. Here's the thing most people don't realize. A lender is really only trying to answer one question. Will this business pay us back? Everything on the application is just evidence for or against that one question. So when you get denied, it means the evidence didn't add up to a yes. Now, let me walk you through what they're actually weighing. The biggest one, by far, is your financials. This is where most denials happen. If the revenue isn't there, if the cash flow can't comfortably cover the new payment on top of everything else, or if the numbers are inconsistent month to month, that's usually the end of the conversation. Lenders want to see that the business generates enough and steadily enough to handle the debt without strain. The second one catches a lot of people off guard. Existing debt. You can have solid revenue and still get denied because you already owe too much. Lenders look at whether a new payment would stretch you too thin on top of what you're already carrying. More and more, this is the reason applications get turned down, even good ones. If the business is already loaded up on obligations, the lender sees risk no matter how the revenue looks. Third is credit, and this is both personal and business credit. For most small business loans, especially at younger companies, the lender is still looking at your personal credit because the business doesn't have enough of its own track record yet. Late payments, high utilization, past problems, they all show up here and they all matter. Fourth is time in business. A brand new business is simply harder to approve because there's no history to judge. This is why new businesses struggle to get funded more than established ones. It's not that anyone's against you, it's that there's nothing yet to point to. And there's a quieter fifth reason people rarely think about: the application itself. Incomplete information, numbers that don't match your documents, a business that isn't cleanly set up. Sometimes a perfectly good business gets denied because the application gave the lender a reason to doubt, not because the business was actually weak. So here's what I'd take from all this. A denial is feedback, and lenders are actually required to tell you the reason. That reason points you straight at what to fix: the financials, the existing debt, the credit, the age of the business, or how the application was put together. Fix the specific thing that got flagged, give it a little time, and the next answer can be a completely different one. The businesses that get approved usually aren't the ones that never got denied. They're the ones that understood the no and came back ready.